a new stimulus package grabbing headlines, and George Soros making a significant investment in Alibaba. So today, we'll dive into those very articles to see if these developments point towards a real rebound for the Chinese economy, or if it's just another temporary blip. Okay, let's unpack this, starting with those stimulus measures.
What's fascinating here is the sheer scale of this stimulus package. It's being called the most forceful since China ended its zero-COVID policy, which gives you a sense of how eager they are to get things moving.
Right, because they're not just dipping their toes in the water here. They've announced a 50 basis point cut to the reserve ratio. Now, for anyone who's not a financial whiz, that basically means injecting a massive $142 billion directly into the Chinese economy.
Precisely. And that's just one piece of the puzzle. On top of that, we're seeing significant mortgage rate cuts that could potentially save Chinese homeowners an estimated $21 billion annually. They're also reducing down payment requirements for second homes, all in an effort to boost that sluggish property market.
And let's not forget about the elephant in the room, or should I say the unsold apartments in the room. China's been grappling with this oversupply of housing. How does this new stimulus package address that?
They're doubling down on a program where state-owned enterprises purchase these unsold properties and convert them into affordable housing. It's a way to tackle that excess inventory that's been weighing down property prices and hopefully stimulate some demand.
So it sounds like they're really pulling out all the stops, but this isn't China's first attempt at stimulating its economy. What makes this time feel different, or is it just too early to tell?
That's the key question, isn't it? We've seen China attempt to boost its economy in the past, and while there have been short-term gains, they haven't always translated into sustained growth. This time, the context is different. The global economic landscape is different. Whether those differences will be enough to deliver a different outcome? Well, that's what we're here to explore.
Right, because as you mentioned, it's not just about what's happening within China's borders. The global economy is watching these developments very closely. And speaking of watching closely, the markets have reacted in some pretty interesting ways. The article from Investors Business Daily highlighted the surge in commodity prices, particularly copper.
Absolutely. Copper is often seen as a leading indicator of economic health because it's used in so many sectors. The fact that we saw a 3% jump in copper prices following the stimulus announcement suggests that investors are anticipating increased manufacturing and construction activity in China.
And when copper talks, companies listen. The article mentioned Freeport-McMoRan, FCX, a major copper producer, saw a significant jump in its stock price.
It's a good example of how these macroeconomic trends can have very real impacts on individual companies. And it's not just copper. Aluminum prices are also on the rise, benefiting companies like Alcoa, AA.
Okay, so we've got stimulus measures, market reactions, but let's bring this back to you listening. What does all of this actually mean for you? Should you be rushing to buy copper futures or Alibaba stock?
Well, as always, it's important not to make any investment decisions based solely on what you hear on a podcast. But what we can do is unpack the potential implications of these developments and help you ask the right questions.
Exactly. And one of those big questions has to be about the Chinese consumer. Because even if all these stimulus measures lead to increased manufacturing and construction, it won't mean much if people aren't buying those goods and services, right?
You're hitting on a crucial point. While those industries might see a short-term boost, the real key to sustained economic growth in China lies in consumer confidence and spending. And that's where things get particularly interesting when we bring in that other article you shared, the one about George Soros and his investment in Alibaba.
So we've got potential for a manufacturing boom, but what about the people actually buying the products? That's where our second article comes in, right? It's not just about China's stimulus package. It's about how one very famous investor is reacting to it.
Right, and this isn't just any investor. This is George Soros, someone known for making big contrarian bets. He's not afraid to go against the grain, and he's made billions doing it.
Exactly. The article mentioned his fund recently purchased a stake in Alibaba, the Chinese e-commerce giant. They're putting down $73.80 million. That's a lot of faith in a company tied to the Chinese consumer market, which, let's be honest, hasn't been the strongest lately.
And that's what makes this so intriguing. Soros is known for his investment philosophy, often referred to as the Soros method. It's not just about analyzing charts and graphs. It's about understanding human behavior and market sentiment.
Okay, so break that down for me. What is the Soros method? How does he use it to make these huge investment decisions?
Well, it's based on this idea of reflexivity, a bit of a complex concept, but essentially means understanding how our own perceptions and biases can influence market events. Soros believes that investors' expectations, not just economic fundamentals, can shape how markets move.
So it's like a self-fulfilling prophecy. If people believe something is going to happen in the market, their actions can actually make it happen.
That's a great way to put it. And Soros has a knack for identifying those moments when collective expectations might be out of sync with reality. He combines that with an understanding of economic fundamentals to make these calculated, often contrarian bets.
So applying that to this situation with Alibaba, is he essentially betting that people are underestimating the potential of the Chinese consumer? That these stimulus measures will spark a spending rebound that most investors are anticipating?
It's certainly possible. Soros has a history of making successful bets against conventional wisdom. Remember, this is the man who broke the Bank of England by betting against the British pound in 1992. He saw something that others didn't, and it paid off big time.
So he's not just following the herd, he's looking for those moments where the herd might be headed in the wrong direction.
Exactly. He's looking for those disconnects between perception and reality, and he's willing to bet big when he finds them. Now, whether this particular bet on Alibaba will pay off is still uncertain, but it's definitely a sign that one of the world's most successful investors sees potential in the Chinese market, despite its current challenges.
That's a really fascinating perspective. It's not just about China pumping money into its economy. It's about understanding how the rest of the world, including major investors like Soros, perceive those actions.
And that perception, that shift in sentiment, can be just as powerful as the economic fundamentals themselves.
Okay, so we've got a lot to unpack here. We've got China's aggressive stimulus package, the market's reaction, and George Soros placing his bet on Alibaba. But ultimately, the big question remains, will it work?
That's the million-dollar question, right? And honestly, nobody knows for sure. But we've uncovered some important clues today. We've seen those aggressive stimulus measures from China, how they're rippling outward, impacting everything from copper prices to, well, attracting the attention of investors like George Soros.
We've also got to remember that it all comes back to the Chinese consumer. All these efforts, all this money, it won't mean much if people aren't confident, if they aren't actually buying things?
Absolutely. And that's what makes that Soros method, that different way of thinking about investing, so interesting. He's not just looking at spreadsheets. He's looking at human nature, trying to anticipate how people will react.
So as we wrap this up, let's put ourselves in those shoes just for a second. If we had Soros's experience, knowing what we know now, that bet on Alibaba, that bet on China, would we make it?
That's a tough one. There's no easy answer. That's what makes all this so fascinating. It's about weighing the risks, looking at all the angles, and ultimately, well, making that judgment call. Nobody has a crystal ball, but informed decisions, those are always good.
Sometimes the best deep dives leave you with more questions than answers, right? Makes you think, maybe do a little digging of your own. Thanks for exploring with us today, and until next time, keep an eye on those global markets, everybody.